How's it going, everybody? Welcome back to the channel. I hope you're all having a great day. My name is Gev. It's Wednesday, June 10th. So let's talk capital. All right, guys. So before we jump into the charts, I want to go over a couple things today. We had not only did we have big moves in the market, we had big news too. So today, the Fed, Jerome Powell, the chair of the Fed, announced that they're committing to 0% rates, or as close to 0% as possible, all the way through to 2022. So they've committed to about 2 years worth of zero rates. You know, they're not going to move it much, either below or above. We're probably going to stay at a 0.25% as we are today, or dip to zero depending on what the market needs. Very low possibility we go deep negative, maybe a quarter negative is possible. But the big thing here is the time frame, guys. They've committed to 2 years of quantitative easing, zero rates, money printing, and all that fun stuff, that the helicopter money. They've committed to 2 years worth of helicopter money, and the reaction from the markets is both expected and confusing. And we're gonna go over all that right now. So before I talk about the S&P 500, I want to relate everything back together real quick. This is a chart of the money supply in dollars from all the way back in 1980s. Basically what it's showing. The key things you want to understand is the zero level and our previous ceiling, which is basically 1,000. This chart represents the quantity of new dollars introduced into the system. Okay, now obviously when you go below the zero line, you want new dollars introduced into the system because you're running illiquid. Okay, and anytime you're running illiquid, it's not a good place to be, because you can have a liquidity crisis and the markets can become irrational just based on the fact that not enough dollars are in the system. Okay, sometimes you do, because people, you got to understand, people take dollars and sideline it too. It doesn't always get invested. So when you sideline those dollars, you're essentially kind of taking it out of the system because it's not being invested and being circulate around the economy, which is when you go under these zeros and you need that. That's expected. The ceiling has been 1,000, right? And we did not need new money circulating in the system. This is the beautiful part about this chart. And what it's showing you is we didn't need it because we weren't even at zero. We weren't even close to zero, right? But what happened? The Fed stepped in and printed $9 trillion, about $7 to $10 trillion, 9 to be a little bit more exact, but between $7 to $10 trillion. They minted new dollars, digital or physical, doesn't really matter. They brought that money into the system, and here we are today, just completely having the money supply skyrocket. Long term, this is terrible. Short term, you can see the fruits of their labor in stock markets with them constantly pushing higher, right? So S&P 500 today is seeing resistance at the levels we've been looking at and have been mentioning for weeks now. So 32 to 18 turned out to be a pretty solid resistance level for now. We have to see how far we push down. You guys got to understand that we are now above this trend line that launched us to 3,400. Okay, so we're above it. So now any test of this, as long as it's a bullish retest, would be a bullish retest. It would be looking for a move higher. That's how we sit today. I want to jump into this is the rational part, right? The S&P 500 is moving higher, or at least not today, but in general has been moving higher in expectation of the Fed holding the rate steady and continuing with its quantitative easing programs and its monetary stimulation program. So stock market had this perfectly on point. They were expecting this. Stock market is always forward looking, and they got it spot on. They got exactly what they were expecting for. So that was good. So here's the confusing part: is this. Both gold and S&P 500 basically rallied in the same time frame. Okay, now gold also makes sense why it rallied, right? Because the Fed said we're keeping our rate low and printing dollars. That is definite stimulation for gold also, because the more dollars there are, the less dollars are valued, and the higher gold is valued compared to the dollar, which is exactly what it trades to, right? XAU USD is gold versus USD. Okay, now gold is moving higher, so that makes sense. S&P is moving higher, that makes sense, because they're both reacting to the news, right? What doesn't make sense is them both moving higher together, and that's the fun part for me, because again, we're stepping into a new phase of history, basically, where we have high unemployment, Gold and S&P 500 are moving at the same time, and the markets don't give a shit about general market. don't give a shit about Main Street, right? So it's screw average Joe. We got everything we need. We're going higher, which is fine. That's what the stock market wants to do. That's what it wants to do. But again, gold, stocks, and crypto basically today too, all moving in the same direction is it is basically illogical, right? But again, because you guys got to remember, gold is a hedge against recessions and a hedge against market going down, right? So if the market is going up, there's really no reason for people to be in gold. They should be in the market, yet people are still heavily buying gold. Okay, I was not expecting us to break above this trend line, but here we are, we have, and the weekly looks a lot better, right? A lot better than it did just a couple days ago. So if we can get a bullish weekly close, I'm going to look for a retest to enter gold on a play up to 1850-ish. Okay, now let's step into some of the stocks that have been rallying hard. But before we do that, guys, please like and subscribe, leave a comment. Definitely helps the channel, helps me to leave a comment. If there's a specific stock you want me to go over, I'd love to do it. So leave a comment, let me know what you guys think. But Amazon rallied hard today, and now it's starting to give a lot of that back, stepping into this is tomorrow's session now. After 3 p.m., it's tomorrow's session. So it rallied pretty nicely to 27.22 and gave about $100 of that back, which is fine. You just don't want to see a weekly close like, oh well, the weekly still looks good. I just don't want to see a daily close like that. But hey, it still looks very bullish, right? So if anything, if we connect these tops, yeah, so you really are looking to get in, Amazon around 25.90 area here on this trend line if it was to hold. Obviously, if it doesn't hold, then it doesn't hold, and we got to look lower, right? But that's where we're looking at Amazon. And let's go to Apple real quick. And Apple, almost the same as Amazon, except the daily candle looks way more bullish than Amazon. So again, let's connect these tops, right? If we connect the tops, you can see a complete break, right? So we broke. Now probably going into the rest of the week, we're going to be looking to push higher, maybe after a retest of the high and then push higher. But definitely we're looking to push higher on Apple. So it's no surprise that the S&P has been moving higher. The bigger names, if we can open this up right here, Facebook is really the only one that's in the red, being down 2% so far for the trading day. Amazon, Apple, Netflix, Google, Microsoft, Tesla, Nvidia, Disney, IBM slightly in the red. But the major players, the Nvidias, the Teslas, the FANG, like we talked about yesterday, FANG and Friends. FANG and Friends is doing good. What's not doing good is the traditional ones like the GMs, the Fords, the McDonald's, the Cokes, 3Ms, and the financial sectors, JP Morgan and Bank of America. Not doing great. Actually, they're kind of neutral today, right? Some of them, Boeing's down big, but Boeing was up big anyway, right? So it should be giving some of it back. But most of these players are down about 2-3%, and in this market, it's not much, right? So we're 10% at this point is much. 2-3% is fine, but the major players are in red, right? Tesla here, it made a massive move today, guys, fully invalidating me, which is beautiful. I love it, no problems there. We are looking to move higher here. Now that we've finally got above the 1,000 level, now it's about does it just continue higher, or does it pull back and give us a re-entry in the low 9s, maybe high 9s, somewhere in the 900, right? You want to see it hold 900 and push higher above 1,000 after reset, or we can continue to push. Okay, right? I'm just watching this to see if it's going to give us a normal re-entry for me to get in or not. But as of right now, definitely not anywhere to enter. We're just watching, trying to figure out where Tesla wants to close the week out. That's a weekly thing. So real quick, let me show you guys daily fully broke out. And one more thing, anytime you get a gap above resistance or a gap below support, that is very bullish or bearish depending on which way you're gapping, right? So now we gapped above support. That is very bullish. Okay, now you want to see the gap hold the support. So any downward move would definitely want to hold above 950 with the body. Remember, the wick can go through. Don't matter about the wick. I'm talking about the body. Hold above this level, right? Finally, let's close this out, not drag it on too long. Bitcoin continuing to just grind higher slowly. I thought we were going to get a nice breakout today in the morning, and the bears stepped in again and started dumping on the market irrationally. We got to love it. One big thing that we're seeing here, I removed our gray channel and I put down a nice purple one. for one reason only, to get the middle dotted line too. So that's our median of the channel, right? And as of right now, what's taking place here is actually more bullish than bearish. We've been grinding slowly under the channel, right? It resembles a lot of this action right here, right? So we broke out, hit the top, got rejected, down, broke out, same level, got rejected down, broke out again, got rejected down, right? Slowly rejected down until we hit the bottom. It's basically what's been happening here. Broke out, got rejected down, broke out, got rejected down, broke out, got rejected down, broke out, and we're slowly now grinding to the bottom of the channel. So if we can get a tap, nice little love tap on the bottom of the channel, help us shoot straight up to remember guys, on the next move higher, we got to clear this 10.5 area. We got to get straight above that. We got to go for this next level, the 11.6 area. We got to go straight to that. We can't play on this bullshit game of hit 10.5, come to 10, go back 10.5. We can't. That's going to be a bearish tone. This next breakout above 10K needs to take us directly to above 11.2. That's as simply as I can put it. And we need to nice, solid blue, green, whatever color you're looking at, bullish candle to the top of that, of this bullish channel, right? So now, as you guys can see, this one came up and stopped, right? That's why we got resistance here, because we were already approaching the top. So now this sideways grind is beautiful, because if we can now get a push, if bulls can actually step in and beat the bears, let's say we were to do something like this, you guys see how that can work, right? We can go straight to the top of the channel and not give a shit about all this medium bullshit, and then we can come down and trend, right? We can trend into the channel continuously, keeping the channel alive. So with that being said, thank you again for watching the videos, guys. I love the support you guys give. Please like and subscribe. Until the next one, thank you for watching.